why you got into the financial markets and where that started.
The same reason that people rob banks, that's where the money was. I have an unconventional view of economics. I think economics is primarily a legitimization device for policies that people want to execute for non-economic reasons.
Hello and welcome back to another episode of Two Blokes Trading. Today's guest is Harry Melandri, a veteran macro strategist with over 30 years experience across central banks, hedge funds and trading desks. He's now an advisor at Macro Intelligence 2 Partners, where he helps decode big picture risks using predictive models and deep historical insights.
If you're the guy making the market, people are going to try and buy. And where you'll make money in liquidity provision is when you have orders. And when you front run those orders, you'll make even more money.
We're kind of living through a speculative kind of mania at the moment, right?
It's bigger than some, so I'd say it's bigger than 2008. Some investors in AI might rue the day they put money into whatever they put money into. It seems to me we've created an infrastructure where we have an army of retail investors who have a significant impact on global markets. And that might be good, that might be bad. What Trump said, it doesn't make sense with regard to crypto, but it does make sense with regard to stablecoins. Trump himself is a beneficiary of this surge of what the BBC calls populism. I'm horrified by the idea of a cashless society. The idea that I can't do so privately, it's not attractive to me.
In this conversation, we dig into why he sees today's markets as dangerously fragile, the hidden costs of climate policy, and how retail traders can stay one step ahead when the next big pivot happens fast. This one's not to be missed. Harry, welcome to Two Blokes Trading. How are you?
No worse than usual. Watcher.
Yeah. I'm looking forward to this, Harry, because there's so much going on in the markets at the moment, and so much of it is macro backed and related. And I don't think people kind of understand how important the macro side of things are at the moment, especially in real divergent kind of a place where we are now. So trying to pick your brains and your knowledge, and hopefully our listeners will get some golden nuggets out of it.
Talk about being sad to fail. I will do my best.
So before we jump into that, tell us a bit about why you got into the financial markets and where that started.
It's the same reason that people rob banks. That's where the money was.
Yeah.
So I came out of college in '88 and I joined the Bank of England because I'm an idiot. I actually, in my intake year, there was a geezer called Andrew Bailey, big bloke, but he was down that's right. He was down the corridor from me. And so was a guy called Andrew Gracie, lovely chap, quite thin. So I worked for the Bank of England for a while. At the time, I thought I wanted to be involved in economics. Of course, I should have known better. I mean, after 3 years and then another year and a year or so doing a master's, you'd think you'd know better. But actually, you have to work for the Bank of England to understand, A, that splitting infinitives is a terrible, terrible crime. And B, that, writing the quarterly bulletin might be a little dry after a while. So I'm sure and you know what, it's amazing. The guys I've got employed there now, they're all PhDs. When I joined, there were lots of classics classics with BAs only, who were at senior levels. So things have changed dramatically over that course. But I had about 4 years watching people making lots of money elsewhere in the city, and I thought, it would be nice to retire at some point. So I jumped ship and I went off to work for, I went to SG Warburg's and got a job as a market maker on the European equities team, which was run by a guy called Ian Wace. I don't know if you've heard of Ian Wace. Wace is half of Marshall Wace. So Ian did all right for himself, I think. So that was my first gig in trading. I'm terrible, by the way.
Really, yeah. I think anyone that gets into trading at the start is terrible. And
European equities market making didn't have much call for people with economics degrees from Cambridge. And also I was a Spurs fan, a West Ham fan. This caused a certain amount of friction.
Tell us, as a market maker, what are you doing? I mean, just for people who are listening in, who don't understand what a market maker is and what their role is within financial markets.
So first of all, I'm going to say I'm 2'4" and a monkey geezer. What do you want to do? Right? That's the first thing I'm going to say. And secondly, the idea is liquidity provision. you commit to offering a price, and this is the old days, right? You don't think you have to commit to either side of the market, but back then we have algorithms to do this today. But back then you put your bid and your offer on screens, and they committed you to trading in the minimum size. So you were committing the firm's capital to that liquidity provision. And liquidity provision profitable? Well, generally speaking, not really. Um, but what it did do is it opened the doors to other things that the bank would do, like analysis, research, and sales. And then you got corporate finance and other activities like that. So we did make money, and we did have a positive budget, but it wasn't liquidity provision that made the money, right? Generally, you're the wrong side of the news flow. If you're the guy making the market, people are going to try and buy. And where you'll make money in liquidity provision is when you have orders.
Mhm.
And when you front run those orders, you'll make even more money. So that's how market making functioned or functions.
Sure. And really, at what point did, I suppose, through your journey, and how much has changed in terms of your macro outlook and your view? Like, do you obviously have a structure, right? Can you walk us through how you create that macro view from like insights to narrative to portfolio action?
So I have an unconventional approach. Um, I have an unconventional view of economics. Um, I think economics is primarily a legitimization device for
Mhm.
policies that people want to execute for non-economic reasons.
Mhm.
We have to put policy into the broader context of government. So right now, what are the policy objectives? Pick a country. Ask me a country that you want to discuss.
Well, US obviously.
Okay, let's
Yeah.
talk about the big kahuna. So Trump has his own personal agenda. A Republican Party have their agenda. Congress has its congressional agenda. The US is a great power and has great power objectives. Those objectives are slowly being redefined. We were in a unipolar world, or we might be in a multipolar world. We might be transitioning to that. The United States, I've seen evidence that the United States is prioritizing the Western Hemisphere and the Americas as its sphere of influence, and that it will look at other spheres as places it intervenes in pursuit of American interests.
Mhm.
Um, so I take into account the bigger picture on policy. And obviously, what the US wants to do is to maximize the economic growth and its influence in the world, maximize the welfare of its citizens overall. But some citizens' welfare matters more than others. And uh, we live in a world in which there's huge technological change, I should say, um, and the leaders of that technological change will benefit in the future. So one of the US's the US has very similar strategic objectives to China. They just don't list it like China. China listed their strategic objectives as being AI, robotics, semiconductors, and uh, what were the others? Biotech. There's a list, like a 5-year plan in the case of Chinese. So you can see exactly, quantum computing
Mhm.
and nuclear fission. All of these strategic objectives, if you achieve them, you'll be in a dominant position globally. If you had an unlimited amount of energy, you'll be in a dominant position globally. You have the lowest cost for your industry. Um, the US can't allow other powers to develop dominance in any of those areas.
Mhm.
So of course we have an unlimited budget for AI. It's just that we have a capitalist system. So the capitalist system is allocating resources to those policies.
Sure. And like I want to kind of touch upon the US and politics a bit later on as well. But you previously said that we're kind of living through a speculative kind of mania at the moment, right? What
Yeah.
makes kind of this moment feel different than maybe past cycles that you've seen?
I don't know. It's significantly different. I mean, I do think there's a geopolitical context for it as well. It's bigger than some. So I'd say it's bigger than 2008. 2008 was pretty damn chunky in
Mhm.
terms of the resource misallocation that took place. I don't know if this is a resource misallocation. I have a strong suspicion it is. And when I was thinking about this and talking about this for mate the other day, and I think my argument at the time was, this is how we break eggs and make omelets here. We do them by creating incentives to channel capital to places we think it will make the most money. And when you do that, there's a chance you might channel a little bit too much money into those places or do it inefficiently. But never mind, we'll get AI. We might just, some investors in AI might rue the day they put money into whatever they put money into. But AI will arrive, and we don't care about those investors. So collateral damage.
And I suppose within that collateral damage, how much of kind of retail participation, is that created a more of a fragile kind of setup at the moment?
So the retail participation issue does, I mean, keep me up at night is a wrong phrase, but it does worry me, because it seems to me we've created an infrastructure where we have an army of retail investors who have a significant impact on global markets. And that might be good, that might be bad. Now, what's his name? The geezer, Melville Capital, the guy who got run over by retail and GameStop, the Wall Street Bets crowd.
Yeah.
I'm sure he felt it was bad, right? But it gave us a warning shot about how big these guys are. Somebody somewhere is buying an awful lot of zero-day calls.
Yeah.
And so you get the equity market gets bought on the dip and it never goes down, and these down moves. Now, to my mind, it gets you into a position a bit like a forest fire, where if you don't have a big correction, you'll have a bigger correction later. So if you the longer you don't have a brush fire, the bigger the eventual brush fire will be. And every now and then you're meant to have 5% corrections. Every now and then you're meant to have 10% corrections. And that clears the way for a more healthy rally. Now, that doesn't mean that what's going on is a misallocation of resources. There's no proof of that. But my sneaking suspicion is there's a misallocation of resources.
Mhm.
And I think, some of these data centers may not be worth all the money we've put in them. Some of these quantum computing companies may not be worth the billions they're currently valued at. Um, I look at
That's so imperative though, right? I mean, like, we need data
it's
centers.
absolutely, you're going to need them, but how much will the individual investor make from the data center that got built? And what were the assumptions? It might be the case these are enormously profitable, but when I see Morgan Stanley trying to divest itself of its economic interest, I think to myself, well, they're not convinced, are they? Remember Mandy Rice Davis's comment? So,
That's just shows the instability though, and just in general, there's so much instability. And I think this kind of, this run to AI, and I think the whole idea of quantum computing is going to blow everything out of the water. I really do. But, we are so overstretched. And like, at what point do we see this, we'll kind of touch upon it in a bit as well, is like, you know, liquidity in the markets as well is huge. I mean, like, that's something that's a real issue at the moment as well. It's something that I had a interview recently actually, and we went into it in quite a lot of detail. But it's a real issue at the moment, like a real issue. And what's your viewpoint on that?
liquidity in the market is
Agree.
huge. That's I think you're suggesting it's a bug. I think it's a feature. I'd suggest that the policy mix we have might not be the ideal policy mix from the point of view of old-fashioned central bankers, but it probably is the ideal policy mix from the point of view of the White House. And they have agenda, makes it sound bad, but all governments, all politicians have things they want to achieve. These guys do as well. And I know, I work with Julian Brigden, and Julian, one of the clients of the firm for a long time was Scott Bessent. Scott Bessent, in private conversations with Julian, expressed huge concern about the US deficit. The CBO forecasts show it going to 130% GDP. Well, what would stop it? There's no mechanism in Congress to slow the growth of the deficit per se. So I'd say one of the agenda items for this government is to do something to address the deficit if possible.
They don't have the choice. I mean, like, their refinancing is the biggest issue. then all of a sudden Trump comes out and says he's just going to use crypto to wipe all the debt away, so we'll be fine.
Yeah, I'd like to see exactly how that plan works. I'll tell you. So here's what so I try and read between the lines of everything government does. When I was a kid, and I worked for the Bank of England, I was a dog's body for someone who became the cabinet secretary later, a guy called Jeremy Hayward, or Sir Jeremy. He died a while back. But Jeremy Hayward understood that you figure out what it is your political master wants to achieve, and then you find the most elegant solution for that objective. So trying to reverse engineer what Trump says. What Trump said, it doesn't make sense with regard to crypto, but it does make sense with regard to stablecoins. I contacts of mine who talk to Asian investors tell me that Asian investors are very excited by the use of dollar stablecoins because they have dollars.
Yeah.
They want to make sure that they can transact. They want to minimize their transaction costs. Stablecoins will work very well. And in many places in the world, the banking system is not particularly well developed. Most of Latin America, that's true for, where you have banks in Mexico. If you look at the margins that banks in Mexico or Brazil or Argentina take out of their retail clients, it's absurd. It's absolutely shocking. UK banks would love to be in a situation where they had those kind of margins. Well, the customers know that they're getting ripped off. Ripped off is probably a harsh term, but they're certainly paying more than they could. The odds are they'll buy stable coins when they get the chance, and especially if those stable coins yield. So you can easily see how the US could get sticky demand for something that's fundamentally not sticky, like T-bills, by creating a stable coin financial system, and the funds would come from the banking systems of all those countries where the banking systems are less well developed. It could come from Asian emerging markets, it could come Latin American emerging markets, African emerging markets. And then what you might hear is a sucking sound as those banking systems start to lose deposits to that. And then the US funds its deficit with T-bills, but without all the capital flight that you might otherwise expect when policy goes a little bit off course. So I don't think it's nuts. I think it's a plan. It's a plan that works. I think the thing that I found a bit weird about it was he attempted to restrict European central banks from developing their own stablecoins and e-currencies.
Yeah, yeah. I mean, what does that do to the dollar overall? I mean, like there is a de-dollarization here, right? Like all central banks are now trying to get rid of currencies and move us towards this new ecosystem that they're trying to create at the moment, right?
So you got two different forces happening simultaneously. If the US has got is pulling in more and more debt, is producing more and more debt, it needs to find the demand for that debt. As you go to 130, 140, 150% of GDP, as that debt levels rise, it would naturally tend to force curves higher. And that would start to have crowding out effects and other adverse economic effects. What you need to do is to persuade there to be some investor base for it. Well, stablecoins is one solution to that. Another solution to that, you've come across beauty contests, but what about ugly contests? Why can't you just be the least ugly person in a room to win a beauty contest? Right now, I don't know about you, but I haven't thought of putting any money into Syrian equities. It doesn't look an attractive market to me. Something's gone wrong and there's lots of countries in the world that's true for. So I suspect the point here is that I don't think the US will have trouble financing it. The dollar could come down. I have no problem seeing that. But the scenario in which the dollar's coming down is probably not a great environment for sterling or for the euro, for the French government debt. Or other marginal players in the world will suffer a lot worse because the dollar actually is a reserve currency. And yeah, the proportion of reserves held in dollars is falling, but it's still the only viable reserve currency in the world, significantly.
Central banks are trying to get rid of cash at the moment as well, right? There's already been written into law at the moment as we speak. I mean, like
Yeah.
we are going to move towards a cashless society, and then does that then just lead us towards a crypto environment? where that
Um,
pushes towards.
no, so a digital currency environment for sure, but I'm horrified by the idea of a cashless society because I'm not saying I spend money on drugs or prostitutes. I'm not saying that. Just I'd like my wife to be aware that she can go through the records, the credit card receipts are all there. But the idea that I can't do so privately, it's not attractive to me. I don't want to live in a society that has that degree of potential coercion. So I think it's a terrible thing. But I agree that that's the direction we're going in. Um,
That like what do you start trading in? Do we all start buying gold and try and barter in gold or something else? Or like, I don't think humans will ever lose that value in barter, right? I think it's something that we've had since day one. We've found a way to trade,
you
and which
know,
is our.
There's a book by an anthropologist, Guy Geezer, another geezer who died. I'm forever recommending geezers who died. There's a guy called David Graeber who wrote a book called Debt: The First 5,000 Years.
Hmm.
I recommend it's a wonderful book, and he was what's the phrase? An anarchist. So you don't have to pay for it. You can just download the PDF for free. Well, but it's a great book, and he argues that there was this idea that we started off with barter and then switched into using currencies and developed currencies. It's not true. In fact, we started off with debt and debt obligations.
Mhm.
And I could go through some of the abstruse and weird history. Some of it's based in Mesopotamia, some of it's Celtic peat bogs.
Mhm.
But he made a compelling argument how actually the bottom, the foundation of our currency is debt, not barter. Um, Now, yeah, people are going to trade. People are going to trade, and they're going to need vehicles for trading, things that smooth trading out. Um, and attempts to clamp down on that will result in capital flight.
Mhm.
And I'd say that the way, first of all, you talked about de-dollarization. De-dollarization is a natural result of tariffs. If you're going to start clamping down on trade itself,
Mhm.
if you trade in goods and services, then you're going to restrict the flow of capital
Yeah.
as well. It's a corollary of the same thing. And if you take it to the limit, we go to an autarkic world where there's no trade and there's no capital flows. Um, what they intend, and we know this because we saw it in the previous Biden administration, Jake Sullivan announced it in a Brookings talk. They intend to create an ecosystem which excludes unfriendly adversary countries. Um, well, some of those unfriendly adversary countries are quite big,
Mhm.
right? So that is, and the thing about one particular unfriendly adversary country that's particularly big, is it was a huge global saver. So when we exclude them, we restrict the flow of capital back into our markets that was coming from their saving. We have to save the same degree. Now, I raise that point. It's very interesting macro markets right now. You've been watching JGBs, right?
No.
Ah, you're probably right because they're not that interesting, but they have been selling off quite hard, right? And they're selling off because the Japanese have finally, Ueda has finally decided to raise rates in Japan.
They have. Yeah.
Um,
Quite surprised.
it's Well, they needed to for a while. Look, Japanese rates are very negative in real terms, right? Real rates in Japan are heavily negative. The point at which they decided to raise rates just came after the new PM, Takaishi, I think, announced a massive supplementary budget. So the total deficit in Japan is going to about 6%.
Yeah.
That's in line. This is a chunky deficit. It's not that far off US deficits, but it's a lot higher than European deficits. And Europe's supposedly funding a war in Eastern Europe. So, um, how do you have rates massively negative while you have fiscal policy massively stimulative? Of course, they're going to they have to raise rates at some point. Otherwise, it's inflationary. And there I bury the lead. The whole point of this is it's meant to be inflationary. It's meant to be inflationary. The Japanese are not the only ones doing this. There are several other countries running. I mean, the term I prefer to use is running it hot,
Mhm.
but I believe Goldman Sachs uses the term high pressure economy. Okay, great. Either will do. Um, we are living in a world in which government wants to do big things. It needs a lot of resources to do those big things. They want to decarbonize their economies. They want to build new electric grids. They want to rebuild defense industries to take on adversaries, big adversaries. Each one of these tickets is like a couple of percent of GDP.
There's so much underinvestment in infrastructure, especially in the US. Like they need trillions to cover this, right?
That's why Trump is announcing these deals with various, people like Saudi Arabia or Kuwait. I mean, you don't see the deals materialize, but the idea is you want to use the US market, you got to put your capital in the US and build it here. And this is to address the fact that the last 40 to 50 years saw a deindustrialization in the American heartland, which created an electorate that wanted to vote for Trump. I'll give him his due. He's the definition of an honest politician apparently is it's somebody who stays bought after you buy them.
Okay, yeah, yeah.
So so I'll give Trump his due in that sense. That's what he sold the electorate. That's where the policy is driving.
It's not possible to have the industry that they want in the country when you can't afford the labor. Where does that balance come from, or does he truly believe it's possible?
Depends.
People don't want to work as much anymore as well. People don't want to go work in factories anymore. People are less inclined to do these jobs what they wanted to do.
So there's two counter arguments to that. One of which is data centers need electricians, and if you pay enough, you'll get electricians. All right. So of course, it might take you a 3-year lag, but one of the issues is wage rates are not high enough for certain types of jobs, and they have to get higher. It's a redistribution. The other side of this is for any given, like the labor supply in the US is a demographic problem, but some part of it is that lots of jobs don't pay enough. I admit there are jobs that can never pay enough, like agricultural labor jobs.
But a lot of these jobs are going to be taken over by machines anyway. I mean,
then the problem you highlight goes away. So what he wants to is to attract all of the capital in to reindustrialize the US. And there's a bigger, broader strategic imperative. You could argue, and it's a curious thing about this. So COVID showed up a structural weakness in Western economies, which is we outsourced a huge block of our production to China. When we had a shipping hiatus or people shut down, lots of stuff stopped coming. And then we had these inventory chain bullwhip effects and so forth, Well, that's all fine unless you want to fight a war with China. So right now, we're irritated at the Chinese policies, which have kind of monopolized industrial production. Although Lord alone knows that was our objective for the last 50 years, was to monopolize industrial production. And we'd like to reverse that. And we do have it within our power. If we don't buy their stuff, we will create an incentive to build productive capacity in the US. But of course, the side effect or the corollary of that is we're going to have a lot more inflation to do that. You have to have margins to make it worthwhile building the capacity here.
Sure. I just think with AI exploding, with these new I've lost the word, but these new humanoid robotics coming, everything's changing. And now Elon Musk come out and recently I seen an interview where he said we're moving to a world where you'll have a choice whether to work or not. You can choose if you want to work or not. That to me sounds like some kind of communist kind of thing, right? Where there's not enough jobs and we don't, so what do we do? How do we keep the people happy? Or, this is where we're going?
So yes, but the issue is what's the order of events? What's the path? So you've come across UBI, Universal Basic Income, as an idea, where we pay people to do nothing. And we do that. Well, we're not paying them to do nothing. We're paying them to stay home and not shoot anybody. That's what that's really about. We're paying for law and order because people have to eat. And that's the thing. Elon Musk is saying people won't have to work. That's fine as long as they can eat. So we're going to need a redistributive measure for GDP, some system to redistribute GDP to the labour force or the ex-labour force before we can implement that scheme. If you don't, what you get is the immiserization of the labour force until they get so pissed off they vote for fringe candidates that offer them a way out.
Yeah, well, these guys know the future. They can see it. Like they're touching it. They're feeling it. They're building it. They know what's coming. And I think the power is shifted to these high net worth blue chip owners who control the narrative, because these are the same guys that are putting people in place to push
It's
the narrative.
certainly helps if you own the Washington Post, if you own Sky News, if you own the media. Your message, your preferred message, is more likely to get out there for sure. But there are issues with all of this, and we haven't gotten there. I guess we should focus more on the shorter term, for trading purposes, because this longer term, it's very tough to trade, right?
Sure.
I mean, if you follow this, take this to its natural conclusion, then productive capacity is worth a lot more in an environment with AI and with robotics. If you have the robotics factory, why would why would somebody build a new one? You'll build everything that's necessary, and you'll take all the returns. And there's no need for workers. You don't have to share that. So if you have the brand, you don't need anything else. And what's the return on equity at that point?
Sure.
So
Like you touched on a second ago, fringe politics. Are we? Is there? What? First of all, what does it mean for risk assets? I guess going forward as well. But is there an issue with? Is there destabilization potentially there?
I think we've seen some of that for sure. I mean, I would argue that Trump himself is a beneficiary of this surge of what the BBC calls populism. I always think it's a bit weird I can't work out the difference between populism and democracy. Um, People do vote their interests, and apparently if you vote for your interests and the BBC has a different interest to you, then you're a populist. It's kind of weird to me. But there are issues. People are worse off in lots of places, and they're pushing back about being worse off, about that redistribution that's happening, that's where their living standard or standard of living has declined over the recent past. Now, how does that destabilize us? Well, did Trump really? He promised certain things, and he is moving towards them in some degree, but he's not delivering. He is When you talk to political analysts in Washington, they say if you want to know what Trump will do, ask the last guy who's in the meeting with him what he's going to tell him, because apparently that's the best model of what's going to happen. I'd say that you see this populist drift all over Europe, but the populist drift is a reaction to declining living standards among the bulk of the population. People are looking for an answer to that, and there aren't any good ones. Where's the declining living standards coming from? Well, some part of it is the fact that we have restricted the degree of free trade and restricted the reflow of capital, because we know we're trying to restrict Chinese access to our markets and tariffing them out, we've restricted the flow of cheap energy via the Russian Federation, and that has consequences. The energy that Europe got cheaply from the Russian Federation now comes via India. Of course, that's pushed up costs. And a lot of that natural gas that was coming out of the Russian Federation just being burned in the atmosphere now. It's got nowhere to go. We can't produce it. And that's deindustrialized Germany. It's fine. I mean, these are consequences of choices. I'm not saying the choices are wrong, but I concede that these are the consequences of those choices.
And I was going to touch upon, I know you're working at the moment with macro intelligence to partners. Is that right?
Yeah.
And you use kind of proprietary predictive models, right?
Sure.
How do you balance kind of like like a signal from that model with human intuition? Because I'm just interested to see how it works, how it sets up, and how you differentiate.
This is a question about what do you know? Actually, it's a philosophical question. How do you know what you know? And so when we constructing the model, inevitably we have a prior view of how something works. So we're not doing like a a weird AI search where the AI sorts through every PCA and finds some relationship. Like what we're doing instead is we're saying, okay, we think there's a relationship between X and Y, and we probably think that because it's standard macro. And then we look at it and we try and fit the lags or work out the other predictive variables that might go into it. And we then get to a point where we get a fit. But some part of that is just saying, well, what factors do determine demographics? Actually, demographics is a funny one to pick because you've got a pretty good idea of it's a kind of fully deterministic variable, right? How many 75-year-olds there'll be. In the absence of a major war, you kind of know that in 10 years' time, all the 65-year-olds will be 75, apart from those who died. So it was a weird one to pick because that we kind of know how that works. The life insurers know better than me, but we do fully define it. With regard to monetary policy, that's a bit trickier, isn't it? So there are other things going on. And, one of the fun things I like about this Trump administration, so I remember having a lot of arguments with Julian before Trump got elected or around the time Trump came in, because Julian's got his head stuck. I perfectly understand, most people do. He views monetary policy through the prism of the last 50 years, right? And like central banks are independent, and they'll do things to control inflation. I would tell you, and I'm nuts, so ignore what I say, but I would tell you they never were independent. The independence was put in place because we had a particular view of what they should do, and we wanted to try and lock that down for political purposes. And now there's a conflict between that way of looking at the world and this particular American administration. And what's being demonstrated by the Trump administration is Fed independence as a fig leaf. And what you've really got is something which slows down the White House for a year or 2 years, but not something which can stop. So, and I think we kind of knew that. Like, imagine a Bank of England that was executing a monetary policy that was downright contradictory to the government's policy. What do you think would happen?
We all know what'll happen.
Right. The cabinet secretary makes a phone call. Probably the Treasury Secretary's permanent undersecretary makes a phone call to the governor of the Bank of England saying, dear chap, could you, is it possible to shift that policy? If it's not, there's a wonderful job for you in Oxford. There's a college in Oxford that needs a new master. Are you interested? So, because that isn't how it's meant to work.
Sure. That's right.
There's a certain amount of independence, but not too much.
Sure. And I believe you guys are kind of telling people to move towards cash at the moment. Is that right?
No, I don't. That isn't the way I put it. Though I don't even know what that means really in the big scheme of things. I mean, you might say that we're averse to risk assets. Are you averse to risk assets?
Well,
and I don't think you're being paid enough in credit. I think there are some credit instruments, particularly the riskier spectrum credit instruments. There's a problem there. And the problem is the AI build-outs are expensive, and it looks like our big rent producing franchises in tech are going to issue a lot of paper. And when they issue that paper will probably be, almost definitely be money good, notwithstanding Oracle's CDS blowing out recently. I'd argue that Oracle CDS blowing out is just telling you there's a lot of paper coming. But when that paper comes, I wonder how much appetite there'll be for higher risk paper at the same time. So I wonder, and what I wouldn't want to say is that means you've got to sell crappy, high yield bonds, although there's no such thing as a high yield bond now. The junkiest paper is not junk paper. Junk debt is not the junkiest paper. It's probably leveraged loans and stuff like that, which is junkiest. Middle market, the stuff that banks used to lend but the banks pulled out of that market in just after the GFC because they got excluded from it by central government that was pissed off with them for losing so much money. I worry about that kind of debt and how that will perform, but you could reverse it very easily and say, if what that's telling you is that monetary policy is too tight and that monetary policy has to be eased, or there's going to be a whole series of defaults in the downward pointing part of the downward leg of the K economy. So the AI economy currently has no problem attracting capital for good reason. But the other parts of the economy are capital strapped.
Yeah.
And you wonder on what terms they'll roll over their debt. And what the blue owl thing that happened a few weeks back told you is that people were looking to redeem, to get out and say, thank you, thanks for the 12% returns for God knows how long, but perhaps I don't want to leave that on the table. That makes perfect sense to me. I prepared a chart on silver for you. You look at the silver chart and look at the way gold has performed, look at the way copper has performed, and look at the way XME, the miners, have performed. And you could easily get the impression we have some sort of debasement trade going on at the moment. I think a lot of people who bought Bitcoin are arguing that we have a debasement trade happen. I suspect debasement trades happen over quite long time frames. So we can easily have we can easily kind of trade back and retrace a little bit on that trade, and people might get hurt a little bit in the retrace. Do we have a debasement trade going on? Well, silver broke a 50-year resistance line. That's got to tell you something weird. Either there's an enormous demand for solar panels beyond that.
Right. Has it not been over how many such years before this? No, I mean, it's
Right. And we used to use film, and apparently, it's busted the level and it's still trading well. I think that's a rolling debasement trade happening across the board. If there's a recession, the US authorities, including the central bank, will have to decide whether their problem is inflation or their problem longer term inflation, or their problem is making sure that we don't break stuff. My guess is they will make sure we don't break stuff.
a double-edged sword, though, right?
Not really. In the short term, it's probably fine, because as far as when we do our inflation models, what do we see? Well, we see longer term inflation still there, but it's obvious that the shelter components of the CPI are coming down across most of the US. And there are reasons that might be the case. I couldn't tell you exactly, but my guess is it's, the policy towards migrants is a little less friendly than it was. So that's taken pressure off housing markets. The policy towards Section 8 and housing subsidies is much, much less friendly than it was. That's prevented, landlords from ripping off big chunks of money which are available to people with housing vouchers. There are factors there, but either way around, we had a big surge in rents in the previous 3 or 4 years, and that stopped, and now it's reversing. So my guess is, that biases inflation in the short term down. And it's not like central banks are trying to control longer term inflation. If they see short term inflation come down, it's going to be very politically difficult not to cut rates. So, for example, we have a December meeting. A couple of weeks back, people were saying, we're listening to some hawkish commentary from a central bank saying, well, they might not cut.
Yeah, that's
Well, that's right. It's absurd, really, isn't it? Well, I think the point is, if inflation is sufficiently low, they're going to cut every time they need to. They're not going to let stuff break.
Yeah, well, if it's not broken already. But look, finally, tell me, like, when we kind of zoom out, let's say over the next decade from now, right, from what we've already spoke about, what do you think the kind of next era of the markets will be? What do you think it looks like?
The next era of the market, I haven't thought about that at all. If we move in the direction we're moving in, we're going to be back in a period in which we have capital controls. We have restricted flows of capital, which is incredibly we have these huge outsized markets compared to what markets look like in the 60s. We have giant investment banks, big bloated investment banks. It's not niche anymore. Hedge funds are enormous. They have specialist market making hedge funds, specialist high frequency hedge funds. The financial sector is absolutely enormous compared to the early 60s when we restricted capital flows. When we liberalized capital flows, that enabled that enormous expansion. And then we had like Big Bang in the UK and equivalent liberalization in the US. If we're going to go in the direction we're currently going in, we either have to define free world where we have free capital flows and no tariffs, or we're going to have to define we have a world in which capital flows are strictly regulated. At the moment, I think we're heading towards a regulation of capital flows, which is going to be a bigger problem for the likes of me. I may have to explain why I've moved money from this account to another account to another account, stuff like that. Now, to answer your question, but what I would have focused on, if I was hoping you'd ask me a different question, of course. Whatever. I was hoping you'd ask me what's your view over a 1 or 2 year thing, and it seems to me that the big beneficiaries of this are emerging markets, and the emerging markets are going to perform quite well through this. And I thought, yeah, it's just with the except China. Is China an emerging market? I'm not sure. I don't think it is, but I think it's still classified. I was looking through some fund documentation, and I was trying to buy an emerging market fund the other day, and I looked through one particular fund. They had a 10% allocation to Taiwan Semiconductor, and I thought to myself, that wasn't what I had in mind. Okay, so yeah, what I wanted was Brazilian equities or Thai equities or something like that. But what I got was Taiwan Semiconductor.
And
So
why do you think there'll be an emergence with through that? Is that just because of an emergence of technology that will allow them to adapt and grow and add it fast?
well, why would emerging markets do well?
Yeah.
I think we're going to be in an environment where, at the moment we're currently gearing up for wars. We don't have a big enough defense industry. That means we want resources that we can extract to build the weapons for those wars. We need heavy industry and we need the resources to do that. Plus, they are outside of the two big blocks, so they get to trade with both or extract better and better terms. But one of the recent trades I've done, which had done very well, was I owned Argentinian restructured debt. And I bought it early in the restructuring or slightly before the restructuring because I'm an idiot. It had done very well. And what's that, a 2-bagger or 3-bagger or something like that. It was a good trade. These things are better trades, a bit like houses because they have to be quite big. So if it works in size. And if it doesn't, you're sad, very sad. Anyway, so I recently got out of that trade. And I got out of that trade because I looked at the deteriorating FX balance, and it never occurred to me for 1 second that the US administration would step in to bail them out. So you might want to ask yourself why the Trump administration stepped in to bail out Argentina. And one answer might be that what they didn't want is for Argentina to have no options and to fail, and then it to be looked at as a failure of the model that Milei has brought in with chainsaws and hating socialists and stuff like that. That's one possibility. Another possibility is all over the world, China is doing trade deals and trying to build out its trade relationships. The US needs to make sure that it excludes, its policies to exclude other powers from the Americas and to be dominant in the Americas. So maybe a bit of both, right? Couldn't tell. But it did mean that I should never have sold those bonds.
But just as you said there, like we are moving towards a kind of a scary landscape where you see these kind of, you see Putin over in India, you see all these, public relations kind of big, they've created these big PR stunts with, all of their soldiers out and all this kind of like this, they really are turning around and saying, look, we are ready, if there's something goes wrong, and it's when you have these kind of communist states and these, like coming together and like fascists, that's all, like it's a scary combination. And it's encroaching, right?
So you're right. I can't, it's not so obvious. Like we live in an environment where it would be presented to us as they are the hostile actors. I'm not sure. Um, in the same way, my wife tells me that I am in the wrong, and it's an axiomatic thing, and she's probably right in in the case of that. Um, what I would say is looking at it as a wrong or right thing is self-indulgent. It doesn't matter.
Yeah.
It's what matters is that there are interests which are not aligned,
Mhm.
and that we're moving in a direction that is not constructive. Now, a friend of mine has cheered me up enormously when I was talking about this with him, saying, it does look like there are war clouds on the horizon. And, this is usually very positive for commodities, although perhaps I perhaps I shouldn't focus on that thing. And I made those points, and my friend said, if we're moving towards war, how come British government spending on military is not increased? I said, it's a good point.
Yeah, but I don't know. I guess look, but it's the last thing that we want to know. At the same time, like you said, as traders, kind of that devil on our shoulder is like we're waiting for that that opportunity, and that is
Yeah.
every event is an opportunity for
There are no trades bigger than war trades.
yeah.
They're huge in both directions. So if you are drifting in that direction, you'll see commodities going up, you'll see gold going up, you'll see energy prices firming, if that's the way we're going. May not be, may not
Oh,
be.
for sure. Fingers crossed it won't go either, huh?
Well, I'm too old to serve, but I don't really want my kids doing it.
Yeah, I'm getting the next ticket to New Zealand anyway. I'm um,
Yeah, you and I, we have a similar mindset on this.
yeah, yeah, for sure. Well, look, it's been a real pleasure to have you on today, Harry. It really has. It's been really enjoyable, and we'll put all your links to the company in the description. And again, I could have spoke to you for hours. I'll be honest with you. And
It was a
so,
pleasure. It was a pleasure. I've got to tell you, I really wanted to speak about the philosophy of trading.
come on, Em,
So
come on.
another
See you.
time, but not
Nah.
now, because
Okay, let's get you back and
yeah,
we rearrange that and let's get you back in to do that.
absolutely,
We got
absolutely.
carried away with everything.
On macro and geopolitics, if you don't start me on geopolitics, I go on forever.
Thanks again, Harry. I really appreciate it.
My
Look
pleasure,
forward to having you
Jonathan.
back.
My
Take care
my
now.
pleasure. Have a good one, mate.
Cheers now.